Okay, hello and welcome to another wrap-up video for the week. Now, this week I'm doing it on a Friday, 6:15 p.m. my time, because I'm not going to be around for the weekend, so I thought take care of it now. So for the week of 15 to the 19th, right? So let's take a look. Now, in the beginning of the week, as you know, as always, we had the swing days and the times and the hours to travel. By the way, I did post a bunch of stuff in social media, right? So if you, let's do this, right? If you follow me on X, all right, you'll be able to see what happened. Whew, mostly, right? So this is like Wednesday. When's this? This is also Wednesday. This is for Bitcoin, right? This is for Bitcoin. This is for SP 500, as you can see. So I've got a bunch of stuff here. If you are following as well, you can like pretty much follow what's going on now. Swing days, Monday, Wednesday, and Friday for gold. Euro dollar Monday, Tuesday, or Wednesday. So we had like 3 days here, right? So we had to be like really careful on these 3 days. Then Bitcoin Monday, Wednesday, Saturday, SP 500 Monday or Tuesday or Wednesday, once again needs care, 3 days in a row. But the important thing here is, right, when we got this is 15 to the 19th. You've got to also remember we're coming from previous week to this week, right? So last week, if you take a look at SP 500, we had a Friday. All right, so that's your Friday. And if I just go back here into the 15th and the 19th, why am I seeing this like this? Let's do this. Full stop, whoops, full stop, save, and then I'll view the post. And then what you can see here on the 15th and the 19th is a follow-up, all right? So SP 500, we had a Friday, right? And then that's your Friday, and then we've got Monday, Tuesday falling off. And remember, these levels I posted ages ago, all right? So when the market was going up, and every time we said, look, from the highs, want to sell into these prices. This is the zone. And you see how the market picked up. Now, this is Thursday, Friday. So we had Monday and Tuesday, Wednesday coming in, right? 3 days in a row. That's your Friday, Monday, Tuesday, down Wednesday. Now Wednesday, look, it's doing the target zone, all right? That's your Wednesday. Now going up into there, right? So that's your Friday, Monday. Okay, does that make sense? I hope it makes sense. So that's your Friday, Thursday, Wednesday, Tuesday, Monday, and that's your last Friday. And if you take a look at last week, let's do that again, right? 8 to 12 December, SP 500, 8 to 12 December, we had a Friday. Now, here you got Thursday as well, because Dow Jones and NASDAQ had a Thursday, so I marked in Thursday as well. All right, so Thursday, Friday, Monday, Tuesday, Wednesday, coming right into here, and then chucking a UE. All right, so if you followed that through, that would have been good. This week I had a drama with Vimeo on Thursday, so I didn't have a video for Thursday. Okay, but other than that, it's all on there, and I did a video for today as well, seeing that there was nothing I could do for this one, okay, because there was a problem, technical problem. Now that's that. So let's take a look at some of the hours, right? So if you want to chuck a UE on a Wednesday from the low, this is your Wednesday. Now on the Wednesday, see how the market really went down into the price there. On Thursday, taps it. So on Wednesday, do I have a closing? On a Wednesday, look, 9:45 to closing. On the platform, that's 8:45, and that's your closing. And that's your closing here, all right? and that's the new bar for Thursday, as you can see, right, opening up here. So Thursday market does the price, which I said it should come into this zone here, nice and easy, tapping it, closing the gap, beautiful. So then I have to look for Thursday hours. All right, so I've got 5 a.m., 12, 1. Now 5 a.m. here is going to be 4 a.m. So that's your 4 a.m. What else did I have? 12. So on Thursday I've got 12, 1, 4:25, 5:10. So 12 and 1 is going to be 11. That's your 11 there. All right, so 11 to 12:30 is there. In London, this is London pre-trade session, market pushing to the upside, going all the way into New York. Now, because remember, we're trading swing days, right? Market's down. Swing day Wednesday, the bias is upside, going to the upside. Okay, so that's the whole idea. And what else? On a Thursday, where should that be going? Targeting closing. Okay, so that was closing there. So it went up there. It didn't quite target the closing, but from here it pushed up into the trading hours, right? So now what's the logical thing here? If I'm targeting closing, but I'm here and the market sold off before, right? If the market sold off here at trading hour on Wednesday, okay, and this is a sell zone, if I come back up here, obviously I don't want to be, okay, thinking to myself, oh, this is so great, this is going to go up forever and ever and ever. Obviously not. So if you went long from the lows to the upside, which you should have, there was a gap here as well. If you learned technical analysis from me, you should have done that. Okay, and knowing Wednesday was a swing day, and sometimes the swing will happen at the end of the day. So the next day you're looking for a buy, Thursday trade hours, going into New York. Now the market, once it comes up, obviously, okay, this is your bar. You're not going to be staring at it. You're going to either manage your trade or take your profit, because we're intraday trading, or we're keeping a trade open for a few days, all right, during the week. Sometimes I'm known for keeping trades open over the weekend as well, but you don't have to. It depends where we got in. And today is Friday. So let's take a look at Friday. Let's do that. What are Friday's hours? So Friday, obviously I want to follow, and my bias is going to be for the week of 15th to the 19th. So today's the 19th. Okay, this is going to be to the upside. All right, so going up. All right, so it's done the targets. Now, what have I got here? I have 9:55, 6:35 to 7. That's going to be like my morning hours. 9:55. Expect energetic and volatile moves into 3:40. So let's mark 3:40. Now 3:40 is going to be 2:40 my time, which is just when New York is opening, and this is 2:45. Okay, so that's nice. 2:45, market heading up. Let's see what happened in London. 9:55. So 7 is going to be 6 o'clock. This is 6 o'clock. And then we've got 8 o'clock, because 9 is going to be 8 on the platform. And this is your 8 o'clock. So the market comes in and goes up. Now, this is an impulse wave, right? Nice impulse wave from Thursday. And that's your 50 at the trading hour. Nice and easy. Pushing to the upside. Market comes back, pushes up. Now look where we're going. From the highs, it's doing a bit of a sell reaction. Let's check out the hours. I've got here 4:20 to 4:40, and then 7:20. So 3:20, 3:20, that's market going up. This is 3:20 to 3:40. So if you traded that, you would have been nice and easy. Okay, 3:40 is, that's your 345 right there. That's your 340 there. So market, London coming down, New York buying from the low of pre-trade session London, going to the upside. The next hour, like I said, 7:20, right? Let me check from here. So okay, so it's going to be 5:20 my time, which is going to be 4:20 here. And this is your 4:20 market rocketing to the upside, and then coming into, what did I write here? 4:40 on the platform, which is going to be 5:40. That's your 4:49, and that's your 4:30. So we're up here at 4:49. Okay, hope that makes sense. All right. So you see how the market is like chucking a Yui, going to a time, and then look how the sell reaction is happening. Okay, all you have to do is just follow through. All right, and that's it. Just match it to your technical analysis. Now, next hours are 5:20 to 5:40. From here, needs care into 7:20, because we're expecting energetic moves. Right, 7:20. That's going to be 6:20 here. Okay, because the platform is 1 hour behind. Remember. Okay, here we go. Let's get rid of this Fibonacci as well. All right. So now I understand the market's done a move and I need care. So what do I need to do here? Well, if a market pushed really up, there's a big gap here. So they're going to sell it down to close that gap. And especially if I'm expecting, right, funny, dodgy moves in the market. Why am I expecting it? Well, I've been measuring the time for it and I'm looking at what's going on at those hours and I'm thinking, oh crap, this is pretty hectic. Okay, so I've got to be careful here. And this is going to be dramatic until 9:15 my time. So 9:15 my time. So it's going to be 8:15 on the platform here. So I've got to be on the 8:15. So I can expect volatile moves during these hours here. All right. Let's get back here. And that's how it is. All right. So if the market comes back, fills in some gap, can go up. And then another good hour is going to be closing. All right, it's going to be closing time for me. Somewhere around there. Okay. So understanding the hours beforehand allows you to do things that can follow up. So Thursday and Friday were not swing days. Wednesday was. Wednesday market did the low. It came to the prices we said it should come down to, right? And then going up from here. Let's take a look at US 30. Now, same here. I said this is your box. Okay, so I said we need to tap in here. So the market from last week was Thursday, Friday, and we had a Tuesday. And I said the market is up, so we want to push into here. The market pushed into here. And as you can see, we've got Thursday, Friday. Now, on the on the Dow Jones, right, we only had a Tuesday. On the Nasdaq, we only had a Tuesday. So Tuesday, the only thing we could have done was to sell into here. So on Tuesday, Wednesday, we could have just sold into there, and that's basically it. All right, nothing else to do. So what you can do then, Tuesday, if we're going to sell into it, when can we sell? So then you got to look into your trade hours. Tuesday, let's see. If you're in the US, which most of you are, actually, 2:15, 3:35, so it's going to be 1:15 to 2:35, right? 2:35 is there, isn't it? Because the platform, remember, is an hour behind. So 2:35 and 1:15, let's mark in 1:15 as well. And 1:15 is right there. Okay, so where do you want to sell? Well, you have to be logical about it, all right? So 1:15, I say to myself, where did they sell off before? Well, this is Asia, and this is where Asia sold off. All right? So where they sold off, we're back in action right there. Okay, so market comes in, sells off into there. All right, there's a bit of a violent move there, but that's what it is. And then what did I say? If there is target, it should go to 8 p.m. and either hang around there or continue to 11:40. So let's go to 8 p.m. Now 8 p.m. is 7 p.m. on the platform. So this is 7 p.m. All right. I said it should either muck around or continue. So once you understand we could either muck around or continue, what are you going to do? Well, you're going to push your stops down. Also, you're going to look at the base, see where the market broke down, did a good buy kiss, pushed down. So from this trading hour, look what happens. Market just keeps pushing down. All right. And then let's take a look at Wednesday. Now this is Wednesday. Wednesday trade hours. Okay, can be a sexy day to trade. 10:30, 10:50. That's 9:30, 9:50 my time. 9:30 is there. All right, so it is a sexy day to trade. 9:30 to 9:50 is there. So the market takes to the upside. All right, so it goes into there. Now look what happened here. Okay, this is a place where the market sold off again. Look, that's the bar that caused. Okay, that's the cause and the consequence. Cause, consequence. Market comes up. Let's take a look at what we have in the New York session. Okay, so New York, this is pre-New York trade. So this is like, I guess, about 7 a.m. your time in New York. So it's 1 p.m. on the platform, 5:25 on the platform. So that's your 5:15. That's your 5:30. So that bar is over, and then bang to the downside. 2 o'clock on your platform, 2 o'clock my time is 1 p.m. And 1 p.m. is here. Okay. Could you have sold here? If you sold here, you would have been stopped out. Okay. That's what would have happened. You would have been stopped out, and that's it. If you sold here, then you should have sold here again. New York, morning, market takes it up to sell it down, comes all the way in. How far am I supposed to go? It can flow to 9:45 to closing. 9:45 is 8:45 on the platform. Where is 8:45? This is 8:45 on the platform. It's done a low, and that's your closing. Did I mention closing? I've mentioned closing. All right. So bang, bang. So knowing the hours, you know how far you've got the potential to follow through. When it's moving in your favor, obviously you want to manage that trade. So knowing the trade hours is obviously going to be to your advantage. So feel free to match those trade hours, okay, and see how you go with the assets that you're trading. We can also take a look at Euro, dollar, Bitcoin, gold. I did a straddle trade today with gold, which I thought wasn't such a bad idea. Gold had a swing there. Let's take a look. Okay, let's do it. So this is, what's this? Let's take, okay, this is gold. All right, gold, I got lucky twice, 3 times here. Now, this morning, this is a 5-minute, is it? Let's turn this into a 15-minute chart because 5 minutes is too far out. Now, look, gold as well. Let's take a look. Swing days. Monday, Wednesday, Friday. Okay, so I've got a Wednesday, I've got a Monday. So this zone is okay to sell off at because that's where they sold at, right? But remember, I'm bullish on gold, all right? So I'm like, I want to follow through. And we have to understand, right? If the market is in an upwards trend, like higher highs and higher lows you see here, right? One thing you don't want to be doing is I'm okay to sell from highs on a swing day at trade hours. I am okay with it, right? Because I'm, all for calculating these swing days and trading hours in advance. But when you're going against the trend, what you don't want to do is go in heavy unless we see some kind of a reversal from there. And we haven't seen that because you see how bullish the bars are. You see how they're always closing to the high side. This has buyers, all right? So selling Up there was like a bit of a, risky. So I did say you can if you want to, but what you have to do is make sure you take small lot sizes. Okay, I trade off the daily and the weekly and the monthly, as you can see here, right? Just like my trading time schedule is like that. But in any case, I know the days in advance. So today I said to myself, what can I do? So in the morning I said, well, this is not a bad place to straddle, okay? Because I don't know if it's going to go up or down. So I said to myself, if I straddle the trade, if at the right time I do a buy and a sell, okay? And if it goes one way or another, because I'm expecting it to go in one direction, because that's what I read, okay? And then on Friday, if you take a look at the comments for Friday, all right, I'm expecting some, like volatile moves into the US session, okay? 3:40 my time is about 7:40 a.m. I think, New York time. So here we are. Okay, so two sessions, right? One is here. This is London, okay, and this is New York. All right. Now, if I take a look at the hours here, right, this is 2:40, as you can see, right, 2:15, 2:30, and that's your opening, 2:45 there. So the market goes bang to the upside. Now, what's this hour here? 4:15. Why do I have a 4:15? 4:15 is just 5:20 to 5:40, right? So I've got 5:20 to 5:40 here. Now look how volatile the market is. Now obviously knowing it's going to be volatile is important because we're trading, right? And we don't want to do anything crazy. So knowing it's going to be a hectic market and knowing that we're going to have moves that will be pushy, shovey, reflexive, threatening until 9:15 in the evening, and then we're going to have a target at closing. Is like, well, okay, we're going to go one way or another. It's going to be energetic, so we're thinking about breaking out. But because it's a swing day and we are at the highs, this could go both ways. So I said, let me straddle it with small lot sizes, okay, but with good returns, like 1 to 7 on both sides. Okay, once I cover risk, going 1 to 7 on both sides. So one side got stopped out, obviously the sell side got stopped out, okay, when we went up, because I got tight stop losses. This one had a stop loss below, where should I have put it? That's your cause for the breakout, so your stop needs to be just in there, all right, below there, okay, because I don't want to be putting stops too far out, okay. So I want to make sure everything is like honky-dory, and we want to cover the trade and then, go in that direction. So same with cause and consequence, right? So we have a cause for the consequence. So this, okay, so the sell side had the stop loss above there. You can see that got stopped out. Okay, market comes back, not enough to stop out the buy. Okay, and then market does another crazy move and goes up. So knowing there's going to be a crazy move in the market, like I said, helps. Now, if I know the future hours as well, obviously, then I know where to follow it to, and then I can in fact say to myself, well, wait a minute, this is the hour we're supposed to be going towards, okay? So let's just push it up there. Why? Because I'm expecting dodgy moves, like I said, until 9:15. So, why risk a loss? Take your stop to the upside. If it goes up into 9:15 and then towards your closing, bingo, then I might just do that 1 to 7 risk return. And right now the second position is risk free. Okay, let's take a look at the euro dollar. Now the euro dollar, On Monday, I said we've got Monday, Tuesday, Wednesday right here. So it's a bit of a dodgy situation. 3 days in a row, right? Monday, Tuesday, Wednesday. Now with the euro dollar, obviously when we've got swing days calculated in advance, what I want to think like, I want to think, okay, if I'm high, I want to sell, but is there a place for me to sell into? Now, when the market is going up, selling is always scary. You're more prone to buy because it's going up. So psychologically, we're like, always on the opposite side of the market if you think about it, right? If you think about it, we're all always going against the market. Now, from here, the market sold off before. So I'm thinking, okay, so we can sell off here into Monday, Tuesday, Wednesday. But how far can we sell into here? Right, because I want to buy again if I come back into this green rectangle here. All right, so this is the zone I want to get into. So what do I need to do? So I need to sell, right? I need to sell the euro dollar. So when am I going to sell? I'm going to sell on a Monday, Tuesday, Wednesday. Now, if it's 3 days in a row, I mentioned it in the video as well. I said to the guys, maybe just wait and see what happens a little bit and not rush on the first day of the week. Rather let it go and let's see where we're going to be on Tuesday, at the end of the day, or Wednesday to see what's going on. And this is exactly what happens. See, Monday, Tuesday, Wednesday. So then Thursday, Friday turns into a sell day. All right, where from? Obviously not from the lows. Now let's take a look at, first of all, Wednesday and Tuesday and Monday. Now look, on Tuesday, market goes up. This is the trade hour. Okay, this is the trade hour. That's the trade hour. I did not have, okay, so this is a trading hour here. I didn't have this set level. I had this level. So once that hour was over, okay, so first of all, the market goes and rushes to the upside, okay, quickly sells off into there, all right, but as you can see, it closes upwards, all right, and then the next hour is there, okay, and then the market just sells off. So it's a bit tricky, but if you think about it, it's Tuesday, so we've got Monday, Tuesday, Wednesday. The market makes a sudden high into what? This is why technical analysis here becomes important. You want to know the cause and the consequence. So market cause for the consequence comes up, stop sweeps, and just goes down. And then Wednesday sells off, and then Thursday. All right, so Wednesday, where are we? Obviously, you don't want to be selling the lows, but look what happens on Wednesday. At trading hours, the market goes up. It's crazy. So knowing these are important. Market makes a low on a Wednesday. Wednesday is a swing day, so I'm thinking to myself, could it be a low on a Wednesday to go up? It could be too, all right? But we want to be careful with that. Why? Because we've got room to go down on the daily, remember? Because on the daily, you want to come down here to buy. Okay, I want to come into the red bar or the goodbye kiss, and this is the zone I want to get into. Okay, so if I want to get in there, okay, on a Wednesday, if it's a swing day, the market came down and then going up, so I want to like push further down here. This is where I want to be. So if I want to keep selling, I need to do it on the highs. Let's do it. So what do I have on a Wednesday? Let's see. So these are trading hours on a Wednesday. Let's take a look at New York. 1 p.m. on the platform and 5:25 on the platform. 1 p.m. Well, this is just 1 p.m. is right, that one there. And then we've got 5 p.m. on the platform is right there, guys. Okay, so the market comes up here 5 p.m. Now look, this requires common sense, right? This is the cause here. In fact, if I turn this maybe into a 1 hour, let's take a look. 1 hour. Whoops. On a Wednesday. All right, on the 1 hour, that's your cause. See, that's a pretty big bar. That is the cause. I'll just take the base for it. Okay, you see? And that's the consequence. That's a trading hour. And then the market comes down. And now look at Thursday, where we're at on a Thursday. Okay, so that's a Thursday. Let's get back here into a 15-minute chart. All right, so the market sells off here into Thursday, into a trading hour, bang, another trading hour right here. This is another trading hour. And look at that. If I come here, look, this is the same bar they sold off at. Okay. Again, trading hour where they sold off. Okay, so they're selling off again. All right. And remember, we want to take it to that target. I still want to take it to that target down there. So we'll see how that pans out. And then on Friday, here we are. Okay. Now, what's the advantage for us? Well, I also know next week, right? So I know what the swing days are going to be for next week. So I'm thinking to myself, oh, got next week's swing days happening. So then I can say to myself, all right, fair enough. I want to follow this down into that swing day. Okay, so it gives me a bias into the next swing day. And then that can also push it to the downside. So then I can say to myself, you know what, I want to take it to the downside. Now look again, this is right now, this is market open right now, right? So let's take a look. All right, so this is where we are now. So market again, look where we're at. Okay, market sells off right here. Okay, that's a big bar. Taps into it. At the trading hour, if you sell here, your stop loss needs to be just above here. I don't do big stop losses. Okay, it's your call, obviously. I don't know how you guys are trading. Everybody's got their own style of doing technical analysis. So the important thing here is once you got it, then you see that it's a place where they sold off, trading hour, sell off 1 bar stop loss or slightly higher if there's a price sensitive level. That allows you to cover the trade quickly. You can cover the trade quickly, and if your objective is to push it to the downside, then you know your next hours, right? So today's the 19th, so your next hours, let's see, let me just put it there for the moment. So you go to your Friday and you say, okay, so that's already done, 5:25:40, it's 4:24:40 on the platform. It's 6:51 my time, so 7:20 is going to be 6:20 here. 6:20 here. All right, so we're going to see where we end up here. If we end up here again, the market may sell off again from here, which is fine. Okay, and then I've got 7:20, and then I've got 9:15 now until up 9:15, which is 8:15 on the platform. It's a bit tricky. All right, it's a bit tricky, and things could be a little sexy until 9 o'clock. That's why we've got 9 to 9:15, which is 8:15 here. All right, so this can kind of like push into there. From here, we can go up into there, and if it keeps going, so from here, then it could either turn into 11 closing or go to the upside. So obviously, knowing where you're at what time is important, because where's the dodgy place to trade? Dodgy places are always in mid levels. They're a dangerous place to trade. Can you trade at a mid level? You can, but how are you going to do it? Well, you can match it to a Fibonacci and a time. So your price time matches again. Like I showed you with the impulse wave. Remember, if I have an impulse wave and then there's a pullback and I see the pullback is into a 37.5, 50, it's a trade hour, it's looking hot, then I can follow that with it. Okay. Other than that, mid levels, mid zones are always tricky. Okay. Also, you have to look for a few things like, where is the recent support? So, for example, this is New York pre-trade session. If you were to go long from here, you would have been, intraday okay. Why? Because over the bigger time frame, we're looking to push to the downside. Okay, so if I want to do anything against that bias, I better make it quick and fast, and I'll only do it if there's a good risk return. So money management is essential. And if you're getting in here, then that's your low. Your stop loss needs to be there. So now your stop loss has to be underneath that level. So you're going to be somewhere around here, right? Okay. So now you have to, okay, entry distance. Where can we go up to? Well, the market can go up to into where they sold off yesterday. That's the bar they sold off yesterday. Okay. And this is the place where they sold off. So what does that mean? If I buy here, I need to get out here or push my stop forward or cover the trade or do something, okay? Because my overall bias is to the downside. And if I'm doing an intraday from the low to go somewhere, then I want to go somewhere to sell off because my bias is to the downside, okay? So the market goes from the low to there, which is the place where they sold off at a trading hour. So I'm thinking to myself, it's a trading hour, let's sell off then, because over the bigger time frame, the daily, I want to come down. Okay, so I'm not doing anything wrong. I'm going with the bigger time frame. My bias is to the downside because I've got a downside target for this. It's doing it at a trading hour at a price where they sold off the previous day. So I'm thinking, okay, that's doable. Once the market sells, I've got the forward hours. Now I'm looking at the forward hours thinking, okay, how far can this go down? And where am I supposed to manage the trade in terms of time? At what time I'm going to manage the trade? All right. And those hours are important to see over here. All right. All right, so that's that. So you can see that's like moving into that direction. So let's take a look at Bitcoin. Now with Bitcoin, remember we had a bit of a tricky week. Why? Because last week we had a Wednesday, market falls in to the swing day. And I did say on a Tuesday, I said, guys, this could also be buyable up there, okay, going into there. And Wednesday was a swing day as well. So let's take a look first of all, right? So Bitcoin, Monday, Wednesday, and Saturday. Monday. So Tuesday going up into Wednesday. Okay. Wednesday selling off from a goodbye kiss. Okay. So that's your goodbye kiss, market selling off. No dramas there. That's all technical and you got price levels. So let's see what happened on those days. So if I come here, this is Tuesday, all right? So remember, Monday was a swing day. All right, Monday was a swing day. So market makes a low. Tuesday, trading hour, market pushing up, okay, and coming into this zone. Now remember, the market sold off. So when the market's going up, you're buying from the lows to go up. Then it's an intraday trade because we're going against the grain. And also on the bigger time frame, we still have room to come down. Okay, remember, we want to come down. Let's do this. Okay, remember, we've got room to come down. Okay, so on the weekly as well, remember where we want to come down to. Okay, sometimes people say you're crazy, it won't get there, blah, blah, blah. I don't care. All right, if I mark a level and it gets there, I look for a swing day. I don't care if it gets there or not. I'm looking whether a place is a cause and a consequence happened at a trading day. At a trading hour, at the right price, we'll trade it. So that's how it is. So now, let's do that. All right, so here we are. So this is the situation, right? So Wednesday, market sells off, we're back down. Now look, this is a low Monday, this is a low Wednesday. So I'm thinking to myself, they could be buying again because this is now a base. You see how the base is happening? But how many times have we been tapped into here? Okay, once, twice, 3 times we've been tapped into the wick. Let's take the wick. All right. So all the buyers are pretty much exhausted here now. All right. You see, there's not a lot of buy action. It's not like going up, breaking out places. It's like chucking a UE, and we might be continuing to go to the downside. But if you're going to do an intraday trade at a trade hour, and then you got a swing day on your side, Thursday, you can be looking to go up again to sell off as well, or you can be looking to go long again as an intraday because you know the swing day. So then comes Thursday. This is, look, Thursday, and look at Wednesday. Wednesday, what a day. Look, Wednesday is a swing day. Market goes up, does a goodbye kiss. The high of that price is 90,332. 90,000, let's see, 332 is about here. Okay, this is the time it does it. Look at that. Okay, that's the time. The time is over. Big rush from one trading hour, look at that, one trading hour to the next, getting into your goodbye kiss, and then from one up push into one trading hour, going right into the next trading hour. And then what are you thinking? Bloody hell, this could be a place to buy. And then that's your closing hour here. So after a big fall, the market goes back up. Why does it need to do that? Well, it doesn't have to, but it's done a big gap. So from here, we're going all the way back up again on a Thursday to fill in the gap. Okay, and that's your gap fill there. Okay, pretty much. When's that happening? Well, it is happening exactly at a bloody trading hour. So this is going to be your sell zone. So the market sells off, stop loss above there, falls right into there. Okay, that's a Thursday. So let's get rid of all of this jazz. And then Thursday, here we are. Let's see, did I have an hour here on a Thursday? Let's check it out. Thursday, 4:25 to 10 past 5, targeting closing. That is those hours, and look at your closing, just beauty. That is your closing bar, and then that's your next bar. That red bar is the beginning of Friday. All right, as you can see here. Sounds good. So the market just falls off right into your closing hours. Nice and easy. All right. After closing, what happens? The market takes off. Okay, so closing, market opens, going up. Another trading hour going up. Okay, now today as well, I said be careful up here because let's do this. Because this is a place where they sold off. All right, remember? Friday, trade hour. We're not exactly in there. Are we in there? Oh, we're pretty much in there. But the market goes up and then sells off. Okay, now it's gone pretty nicely into that bar. So Friday, okay, here we are. Now, I know the next swing day, it's Saturday, right? So what am I going to do? If I bought here on a Thursday to go up, I can follow this into Saturday, but obviously I have to be careful in this zone, all right? And this is why I said this morning, I think in the video as well, you know, it's like they're pushed up, so it's obviously going into this zone. I did say don't buy in the zone here, okay, close to here, because I mean there are no gaps here, but it's just not a good place to buy. Okay, but why? Because too close to the sell zone. Okay, so buying maybe in the closing, the previous day on a Thursday might have been okay, but other than that, nothing to do. Now Saturday we know is a swing day. So then I have to wait, well, where am I going to end up on Saturday? Now, I don't have the hours for Saturday, but if you took timing from me, you'd probably calculate it if you're trading Bitcoin. So you can just, follow that through, okay? And this is how things are looking. So if I'm in any trade, as you can see, I want to be following the time, and I want to manage the trade not just with price but also with time. Hope that was helpful. Time, price, get your levels. You got the blueprint. If you want to download a blueprint, you can from the new website, but it's not finished yet. But anyway, I'll let you guys know when we're moving to the next website. Okay, the new website. All the best. Have a great weekend and take care.